Hello guys, my name is Juan Carlos Medina and I'm going to present about the art of currency analysis, and this is for CSUB 49-1960 class. So to get started, I want to talk about what and where is currency analysis done. So currency analysis is basically using different forms of analysis to forecast whether the value of a currency will appreciate or depreciate, in other words, go up or down. And where is this done? This is done on the foreign exchange, or how I'm going to call it later on, the Forex or FX market. And why did I decide to choose this market? So in comparison to the stock and the futures market, the FX market is a $6.6 trillion USD market. So this means that 6.6 trillion US dollars is moved on average daily on the market. In comparison to the stock market's 150 billion, this is give or take, and the futures market 30 billion. And these are for the US stock market and the US futures market. Another reason I decided to pick this is because the FX market is also the only market that's open for 24 hours, but it is open from Sunday to Friday, so it's 5 days a week. Um, and when I mean Sunday, I mean like it opens at 2 p.m. Sunday and closes at 2 p.m. Friday, so it's not the 6 days. And this was the longest running market until the cryptocurrency market came, and that one's a 24/7 market, but that's a relatively new market, so I didn't want to get too much into it. And these currencies are traded in financial centers, I mean, all over the world. Anyone can trade them, but the big institutions usually trade them in London, New York, Tokyo, Frankfurt, Sydney, Paris, and etc. So right here on the right, you can see that the Forex market is giant in comparison to the other markets. And on the bottom of that, you can see the major currency pairs, which consists of the euro to the US dollar, pound to the US dollar, USD to the Japanese yen, and etc. So how am I going to go about this currency trading? So I'm going to use two forms of analysis, technical and fundamental. So technical analysis is a use of previous market data and patterns to predict an upcoming move. Whereas fundamental analysis is analysis based on external events that can influence the intrinsic value of a currency being analyzed. And like I said, I will use both of these, but I will focus more on technical analysis because I believe that technical analysis suits day traders more in comparison, where fundamental analysis is for long-term position traders. And this is only my opinion, and I believe this because technical analysis is, you can use the previous day's data or the previous hour's data to, forecast where you think price is going. Whereas fundamental analysis is using, things like interest rates, unemployment rates, non-farm payrolls to forecast. But this is only, like on certain days. So it's more for like long-term positions and trend traders. And on the right, you can see the top is technical analysis, an example, and the bottom is fundamental analysis, which is news that's upcoming. So will it be easy? And the simple question is no. And this is because from what I saw on dailypriceaction.com, in quotes, a well-known figure in the forex world is that 90% of forex retail traders do not succeed, and some publications even go as far to say it as 95%. So this means that the odds are stacked heavily against me, and it would be smart to learn what the failing 90% do and do the opposite. So on the right, you see that, every trader starts with the dream to get rich quick. That was me at first. But then 40% trade only for 1 month, 80% quit within 2 years, and only 7% remain after 5 years, but there are only 5% that actually remain profitable. So it's not going to be easy. And here's a review of the sources and how they help me. So Investopedia and Baby Pips both helped me to learn the basics of currency trading. Investopedia helped me understand the very basics of the FX market, as well as to learn the history of the FX market. It didn't really help that much, but it's really nice to know. Baby Pips helped me kind of understand how big the FX market is in comparison to the rest, and I did learn a lot about the basics of technical and fundamental analysis. And for daily price action and Bank for International Settlements as my sources, they basically helped me learn that I had low odds of succeeding at the skill. Daily price action, like I mentioned before, helped me understand my place in the market and how it would be very possible that I would not succeed. The Bank of International Settlements helped me learn that the biggest institutions, such as Deutsche Bank, Citibank, JP Morgan, um, that trade the FX market, which are usually the winners, use algorithms that are set in place to execute orders and profit off market movements. So it was up to me to either like learn how these algorithms work or join the 90%, 95% that fell at this skill. And my main source for fundamental analysis was Forex Factory. And Forex Factory is a hotspot for economic news and data that can potentially affect the value of a particular currency. It's a very helpful website that shows how much impact a news event would have on a currency. So if you see on the right here, there are orange folders, yellow folders, and red folders. Orange folders are medium impact news, yellow folders are low impact news, and the red folders are something that we have to all look out for because they are high impact news. And this color coordination really helps, when you're looking for what will really move the market, if it moves. So yeah, very helpful. And last but not least, technical analysis sources were stock charts, which helped me understand the concept and schematics of the Wyckoff method. And Wyckoff method was derived from Richard Wyckoff back in the 1920s. He's known as one of the pioneers of technical analysis, and it's basically stating that every instrument that's traded goes through a price cycle, which is from accumulation to the markup to distribution and to the markdown. And that basically goes hand in hand with trend trading. And then I also went to the Inner Circle Traders YouTube channel, and this is one of my very helpful sources that helped me learn and understand smart money concepts, which is basically like the algorithms that I mentioned before. It's the one that moves the markets, and they do this by filling order imbalances and taking liquidity. And last but not least, for my sources, I used George Mortimer, which was arguably my most helpful source that helped me master smart money concepts, volume analysis, and Wyckoff logic. So it's basically the culmination of stock charts and the Inner Circle Trader. And I did pay for this service. It was a mentorship that I bought, but I gotta say it was very, very helpful. So what did I learn from all of these sources? Basically that retail traders usually use technical analysis in the form of support and resistance, trend lines, Fibonacci retracements, price action patterns, and other indicators. And I'm not going to go into depth as to what these are because it's not important. But long story short, these do not work. And the only reason these ever do work is because they go hand in hand with the algorithm that's moving price that is being used in smart money concepts. So if you look at the right, the top it's a bit exaggerated, I'd say, but it's basically how retail traders work. They draw a bunch of lines on the chart and they think that price is going to magically follow these lines for some reason, but that's not how it works. So smart money concepts are basically trading using the algorithm the big institutions use, unlike how retail traders operate, which they like to call dumb money in quotes. And an example of this is the nice clean chart that's on the bottom right. It's straight to the point and it works. So for technical analysis, what I learned was that structure and trend are key. So it's important to know whether a currency pair is in a bullish or bearish trend on a higher time frame as well as an intraday perspective. So 80% of trades should be pro-trend and 20% of trades should be counter-trend is what I learned from George Mortimer's mentorship. And Wyckoff analysis also helps us understand that an uptrend is the markup phase and a downtrend is the markdown phase. And accumulation Wyckoff schematics is when one should try to catch a reversal trade, which is a 20% to the downside, and distribution Wyckoff schematics are when one should try to catch a reversal trade to the upside. And I learned this thanks to stock charts. And like I said, trend is king, so usually always follow trend. And ICT and George Mortimer helped me learn about liquidity, and basically they both believe that when price reaches a certain point, it is only to collect liquidity to take price to follow or reverse the trend. So there are various forms of liquidity, and one of them is equal highs and equal lows, and they make for excellent targets because they have liquidity resting past them. So on the right, you can see a before and after of a chart. There was liquidity resting right at the top where price eventually reached, and that was, it was necessary for price to move. I also learned about imbalances and inefficiencies. So besides equal highs, equal lows being used for liquidity purposes, imbalances, which is what ICT calls them, or inefficiencies, which is what GM calls them, Georgia Mortimer, are excellent for gaining liquidity to move price. And basically, inefficiencies are gaps or voids in price that are created to eventually be mitigated and continue the direction of the trend. So these are actually great places to observe price and even execute a trade because the liquidity in these is possible to move price a ton in a certain direction. And on the right, we have many or four examples of inefficiencies. So top left, you can see it was a gap in price. Price eventually reached it and went back down. On the top right, you can see another gap in price. Price reached it and went up again, in layman's terms. On the bottom left, you can see another inefficiency or avoidant price. Price reached it and went back down. Bottom right, same thing. Okay, and I'm not going to get too much into how these work, but it's basically to provide a balance to the orders being placed on the buy side and the sell side. So I also learned about sponsored candles, which is what GM calls them, and order blocks, which is what ICT calls them. And these are more used for entry points because they are the last bearish or bullish candle before a move in the opposite direction. And basically, the logic behind this is that institutions may have lost profits from the expansion that occurs after the candle slash block. So they have to mitigate their loss by returning back to the candle, and thus is our entry. So basically, institutions mitigating their losses is us being able to capitalize and enter during this mitigation. And the sponsored candle in each of these examples is the really big candle that is basically right before the move to opposite direction. So on the top left, the highest candle you could see is a sponsored candle or order block, and it was used as an entry in this case. On the top right, same thing. I don't know if you guys see it was the one that mitigated the previous one. That's a sponsored candle, and it worked to bring price in the opposite direction. And same on the bottom left and bottom right. And these are excellent entry points, and they have really helped me. So another thing I want to talk about is trading sessions. And this is basically when markets are the most volatile because of fundamentals during the London and NY session. So London, here in California, is from midnight through 8 a.m. And the New York session is from 6 a.m. to 2 p.m. That's why I decided to wake up at 4 a.m. every day when I traded to capitalize on the London and New York crossover, which is around from 5 to 8 a.m. And on the right, you can see that the European and American, aka the London and the NY session, overlap, the blue and the red. And on the bottom, you can see the times of each of the biggest sessions. And, this wasn't meant to be a pretty slide, but it's basically me talking about all the jargon. So for me, a textbook trade in this style of trading is one that is pro-trend, so it follows a trend, and it has a target of equal lows and equal highs for liquidity gain. So the entry for this trade will be the combination of a sponsored candle that aligns in an efficiency zone that would have a tight stop loss. So the entry should be near an area that has already mitigated and taken liquidity of another imbalance or block zone. The timing of this trade should be between 12 a.m. through 8 a.m. for the volatility that comes with the fundamentals during the London and NY session. So you see how I tied everything down. That's basically the textbook trade for me. Now let's get into FTMO. So this is a trading proprietary firm that funds traders with capitals of up to $200,000 if they can pass a trading challenge. And here's the good news. I passed the first part of the challenge, and I am currently on the second and last part of the challenge. And if I pass this, I will be funded $200,000 USD. So basically the challenge is you have to get a piece of capital, grow it by 10% within at least 10 to 30 days, and you can't lose more than 5% in one day or 10% of the initial capital. And then for the verification stage, you have to do the exact same thing, but from 10 to 60 days, and then you become funded with the money. So I passed the first part, and I'm currently on the second part. So this is my trade. So I hit the 10% profit target on my first day and my first trade implementing my new knowledge. I also stay within the risk parameters of not losing more than 5% in a day and not losing 10% of the initial capital. And this is a link to my account metrics, and it's basically what I provided on the right. And that's basically showing proof that I indeed did pass the first part of this challenge. So this is my trade. Before, it was approximately 6:30 in the morning on April 8th, 2021. this pair was Euro USD, and I was trying to buy where you see the sponsored candle and inefficiency aligning. So this is actually a textbook trade that I decided to execute. And this was after, so my profit target hit around 9:30 a.m. of the same day, so it took around 3 hours. This is Euro USD, and my buy was successful. So this is my entry on the platform which I decided to trade on. This is Euro USD, as you can see, the minute one chart. So each one of these candles represents 1 minute. I bought it. My lot size was 77.60 lots, or 7,760,000 euros to be exchanged for USD. My entry point was at 1.18839. My stop loss was 2.6 pips. My take profit was 30.5 pips, so that means that my risk to reward was a 1 to 11.73, and my profit was $20,600. So a 10.3% gain on the capital of 200,000. So the risk to reward basically means that I could have lost 11 trades and I would have still been profitable because my risk to reward went to 11.73, which is pretty mind blowing. That's the certificate that they provided me with, and no, it's not Photoshop. They actually provided me with this on April 20th of 2021. And that was for the first part of the challenge. So this is basically my analysis behind the trade. It was a bullish trend. We had a break of structure, a reaccumulation Wyckoff schematic, a sponsored candle that mitigated previous inefficiency for liquidity, another inefficiency that aligned with 50% of sponsored candle, which was my entry point. The timing was London and NY session crossover. This was 6:30 in the morning. There were equal highs used as target for liquidity, so it was a textbook trade, and that's the before and after, like I talked about previously. So, this new skill can help my quality of life by helping me financially. And if I do get funded to $200,000, which I'm very certain I will, and even if I make 5% in a month, that would be an additional $7,000 a month of profit. And that's because instead of being 10,000, FTMO keeps 30% of the profit, so they keep 3,000 of that. And this could definitely bring me financial stability and security, which in turn can lead to a better lifestyle and quality of life because of the less stress. So this would not only include my overall experience of life, like on the right, it would also include my material living conditions because I can afford to live a better lifestyle. Um, I could afford more education, save for my future children. Health, I wouldn't have to like stress about health. If I were to have this extra money in my pocket, I could go for more leisure and social interactions, and I would definitely have more economic and physical safety. So basically, this means that I get money from this, my quality of life will definitely increase because I will have access to much more things and I'll have much more security and less stress. So thank you so much. Here are the sources, and this was a great project to do.